Today's agenda will be, at first we will have a speech of Exchange Union going through our digital asset exchanging overview, and then our mission and vision, our use cases and technology mechanism, and then XUC, our token incentive program, and then the roadmap. So after that, we will have a discussion panel discussing about the digital asset exchange, the current state and the future. And after that, you can enjoy the free time. Okay. So now we will start the speech, and then I will pass the microphone to James Wall, our CEO.
Great, nice meeting you guys. And I think some of you already come last night. And yeah, I'm going to do a little bit introduction about our project. We separate our topic into 8 different parts. I will do 1 to 5, and Killian, our product director, will finish the 6, 7, and 8. Oh, okay, sure. Sorry about that. First, when you take a look at the digital asset market right now, about last year, I guess some of you already invest in cryptos last year, so it's a crazy market last year. And right now, we reach a level with all type of cryptos, reach more than 1,300 cryptos. And with the total market cap reach $700 billion, 24-hour trade volume reached $44 billion, which is crazy. As you can see, the stock market probably a little bit more than that, but in some small stock market, probably the volume is less than the whole crypto market, right? Number of digital asset exchange, more than 100. There are digital asset exchange everywhere. But we also run a business called Digital Finance Group, which do the investment in more than 20 companies over the world. And we got some portfolio company which is exchange like Bitso, Unocoin, or LedgerX. And when we go to visit all the countries, see all the crypto exchange in the world, we feel that there are still some pinpoint problems for the exchange right now. I think the first important one is they are isolated and localized. As you can imagine, the major exchange in the world, Bittrex, Binance, Kraken, Coinbase, nobody can cover every country. And they, especially for the exchange who connect with fiat, Bitstamp is only in Europe, Coinbase succeeding in US, but no one can cover everything. And they have limited trading periods. As I introduced before, and I think Coinbase have 4 trading periods, right? Bittrex have the most, it's 300, but it still didn't cover every token and every cryptos. And some of I think probably top 10 or top 20, they have enough liquidities for customer or for traders to do, but on the rest probably struggle to maintain the liquidity right now. For users, the first you will encounter real-time price discrepancy. For example, in the C2C market in China, you need to buy Bitcoin Ether. There will be probably 15% price premium in China. And in Korea, could be higher, 25%, which is crazy. And also you need to face inefficient and costly cross-exchange transaction, which means you need to verify multiple accounts on different exchange. And it's very hard for you to do that. You need to provide all the KYC information and wait for days and weeks for that, right? So we are here to solve all the problem above. We are the first decentralized network which enables instant and trustless trade between all the digital asset exchange. What I mean, I will explain in detail with some graph. As you can see in the picture, there are 4 different exchanges with different trading pairs. Let's say this is A is Coinbase, D is Kraken, C is Bittrex, B is maybe Coin1, and probably Korea people can only register here, right? US people can only register here. And they got different trading pairs. With our ecosystem, we will make everyone, if the exchange join our system, we will make everyone, the buyers and the traders, they will see every order book in the ecosystem. And with that, we can, this picture, for example, someone in Korea, they can see the order book of Coinbase, Kraken, and the other one. And which means they can have the access to all trading pairs in the ecosystem, and they can get the lowest price when they want to buy cryptos. So we connect all the order books. I think for our project, with our technology, the exchange and the users in the whole ecosystem will benefit from it. For the exchange, they will have access to larger user base. For example, a Korea exchange, they can never have the customer from US, but with our technology, they can do that. And we will help them to increase their liquidity, thus increase their volumes earning, which means probably like Coin1's here, Coinbase is there. They join the union. The worst situation is that there's nothing happen, right? So the worst situation for the exchange is that they still have the same revenue number and liquidity as before. But if we can help them to connect and make some deals, the liquidity and volume could be increased. And I think the fourth will be we can help them to robust decentralized trading infrastructure. For the users, you got title spread for all the cryptos, and you have access to all the trading pair and have the best price to buy and or sell the token. And we will provide a product with simple UI, so you don't need to do like a multiple verified account, which is very annoying, right? And with this project, I'm going to share a little bit more. We try to build a software for connecting all the exchange with our technology, XU nodes. And the most important thing for the project, I think we will make it open source. And right now, we are trying to build our developer community right now to start a project. As you can see, Bitcoin is a new era of open source development. Before that, no one believing that. When the crypto things begin, I think everyone start to believe open source is very important for us. I think the open source is somehow self-sustaining, so we can keep doing that with our open source project. And the code contribution increased the value of the project, and it does the value of our token too. And it is for the first time, the free open source development will pays back. How to realize this? We created a token called XUC. It will not be something as Ethereum or Ripple, something work as gas. It will be a fee and incentive system. Explain it in details. We will reward the exchange who are willing to join the exchange union. We will also reward our users who can trade reach a certain amount of volume via the exchange union network. And for developers who contribute the code, reviewed it, testing it, we are going to reward them And once up, when we running XU reward, anyone who provides service in the union, such as really order books, validate order books, things like that, or other payment channel service like a watchtower, we will also do the reward. So totally, we will reward different. I think we'll reward 4 parties, which is exchange, users, developers, and anyone who provides service in the union. A little bit about XUC. We create 3 billion token, but important, the circulation amount is 35 million token. And larger amount will be locked up in long term or burned. And we set a strict rule for our team, which is we will release 5 million tokens at maximum for a month, and it is controlled by a smart contract. We will tell everyone the details of the usage of our token when we're going to release it. Currently, we are listing on HitBTC and OKEX. Those 2 platforms have 3 trading periods with XUC to USDT, to Bitcoin, and to Ethereum. And we are also listed on the C2C market on OKEX, which means you can use CNY to buy XUC. And we are listed on other decentralized exchange too. In the future, we will be listed on more exchange. We will release it sooner. And we will make it decentralized. Why we will make it decentralized? I think centralized could be easier, but important. What makes it important is that decentralized, there will be no way for any government or any party who want to shut it down, right? Like the internet, it will survive forever. And there's no way for censorship in the system. So that's the most important thing of crypto survive and become so promising right now. Of course, it's decentralized, like Bitcoin, Litecoin, Ethereum, everything, they are decentralized. We got some competitors and similar solutions for our project, but I think there's still a few problems with them. There are some of them are missing incentives, some of them get technology background, and some of them only benefit one side, either users or exchange, but not both of them. Okay, cool. I will let Killian to finish the rest of the PPT and the presentation.
All right, thanks. Hey guys, I'm Killian, I'm the product guy, and I'm going to walk you through a use case first so that we see how that whole thing actually looks in practice. If you guys can't really see from over there what I think because I'm in the way, you might just move a little bit, or maybe I just move. All right, this is Alice, and Alice has an account on Exchange A. So James already introduced it before. Exchange A is part of Exchange Union, meaning it's connected to Exchange B, C, and D, and through Exchange Union. And all exchanges are having different locally traded currency pairs. Currently, Alice owns BTC and ETC. Now she wants to buy 10 LTC, but it's not listed locally on her exchange. So how does it work? She normally, through her interface on Exchange A that she's using every day, she submits, for example, a market order saying, buy 10 LTC using my ETC, please. And then Exchange A goes and propagates her order through whole Exchange Union and finds her the best price for her order across all exchanges. In this case, Bob's order on Exchange C. Bob is willing to trade 10 LTC for 20 ETC. And what happens next is crucial. Real 20 ETC get transferred in real time to Exchange C into Bob's wallet. And real 10 LTC get transferred in real time from Bob into Alice's wallet on Exchange C. The order completed successfully, and Alice is happy. She can see her 10 LTC in her portfolio. All right, this was use case, user experience, point of view. So now we're going to talk about the technology, how we achieve this from a technological point of view. So Exchange Union is based on 3 key technologies. Number 1, payment channels. Payment channels enable us to do this trade that we just saw instantly, meaning it's happening in real time. Number 2, atomic swaps. Atomic swaps, maybe you heard about it. Atomic swaps are used to make this trade that we just saw trustless, meaning exchange A and exchange C don't have to trust each other. And number 3, decentralized order books. This is the very mechanism how Alice even knows that Bob's order even exists. So we are connecting the buyer and the seller here. And again, our users are the exchanges. So we are developing for the exchanges. Little recap, how does it look right now? So it's already perfectly possible to transfer coins from one exchange to another. A lot of people already do that nowadays for maybe arbitrage reasons, for different reasons. But how does it work? So we have 2 exchanges. So now if I want to buy or sell something on exchange B, I have to go to exchange B myself, open an account, verify an account, and then send the coins via a public blockchain, like for example the Litecoin blockchain or the Bitcoin blockchain. What is kind of a little bit inconvenient because it's very slow and sometimes also very expensive. So if I, for example, do an arbitrage trade, the price might already have been gone until my coins reach the other exchange. Why is it slow and expensive? Let's talk a little bit about blockchains and the general concept. Blockchains use a concept that I call broadcast to everyone. So to put it in a metaphor, it's like a soccer arena in the 90s where just every message that for a specific center to reach him was just broadcasted to everyone. We are the loudspeakers. Everyone knew that Mr. Smith's wife has gone into labor, because there was simply no way to direct a message to one individual. It was before mobile phones, right? So I had to broadcast to everyone in order to be sure it did reach this one individual. This is how blockchains work nowadays. This is how every blockchain works. And a blockchain, in order for my transaction to reach my counterpart, everyone has to look at the transaction, verify the transaction, put it into a block and let everyone know. And only then my transaction reached the other party. This is how blockchains work. What makes it kind of inefficient, right? All right, I said payment channels before. Who of you guys knows what payment channels actually are or has a slight idea what it might be? 2, 3, 4. Okay, who has heard about the Lightning Network? Lightning Network, maybe heard about it? Oh, a couple of more. Okay, cool. Yes, we're talking about the Lightning Network. We're talking about the Raiden network, what is basically Lightning on Ethereum, right? So that's the very technology we mean when we say payment channels. Payment channels is just a more generic term to describe this. Payment channels themselves are kind of an old idea, so even Satoshi, the inventor of Bitcoin, came already up with the principle. What's the principle? The principle basically is, he called it high-frequency trades, that I have a transaction, and I don't broadcast this transaction to the blockchain. I just keep updating this transaction over and over again. I keep updating it, so I keep updating different states. That's a basic principle of a payment channel, and we'll talk now how they work in detail. So how do payment channels work? High-level point of view. Exchange A and Exchange B, they're still connected via some sort of public blockchain, like in this case, the Litecoin blockchain. And they now create something I call a special wallet. This special wallet is created by both. So all coins that are in there are require a signature from both of those guys to be moved. And now, both funds into this special wallet. In this case, we have Exchange A funding 100 LTC, and we have Exchange B not really trusting that whole thing, funding nothing into this wallet. And then a magic occurs, and a payment channel is created. And what a payment channel now does is it records balances on each side. So it records that exchange A has 100 LTC and exchange B has 0 LTC. What happened in the background is, if one wants to imagine like what happened to those coins is, we took those 100 LTC out of the public blockchain and put it into the payment channel. So those 100 LTC are now residing in the payment channel. They are not available on the public blockchain anymore. They're kind of in a locked status. They're not really movable anymore once they're in there. Okay, now that this payment channel is created, what it enables Exchange A to do is send over Litecoin LTC in real time to Exchange B, and the balance gets updated. This is possible because it's happening inside the payment channel and does not need to be confirmed on the public blockchain, what would require everyone to look at it and include it into a block. So payment channels are a layer 2 technology. So we are now living in my opinion, really exciting times where we have blockchains, they are around for a while, and now layer 2 technologies are actually coming up, which are built on top of public blockchains. And very important to highlight is built on top of public blockchains means it's connected. They inherit the full security of the underlying blockchain, meaning a payment channel is as secure as a public blockchain. Why is that? Because, let me quickly check now. Because at any given point of time, both of those guys could just go and publish the current state of the payment channel, 99 LTC and 1 LTC for Exchange B, onto the blockchain. They just don't do it. So they keep updating their balances in the payment channel, and those are perfectly valid transactions that are going back and forth. They just never publish it to the public blockchain. That's how payment channels work, and that's why they are instant, how they can be instant, because they don't require block confirmations. All right. Okay, and a real beauty of payment channels. They support routing. This is something with payment channels, once it really clicked on me, that made me understand that this is how we will transfer value in future. It works just like data packets on the internet. So if I have a payment channel with someone, like for example, C has a payment channel with B, I can send money back and forth, that's cool. But maybe I don't have a payment channel with A. So what now if I want to send something to A? I literally had to go and to open a payment channel with A as well, what requires one on-chain confirmation, what is kind of not really efficient or doesn't really meet the goal, because I have to go via the public blockchain first in order to open a payment channel. So now it supports routing. That means I just can go through B, because B is connected to A and to C, so it can just forward my payment that I want to send to A. Exactly like data packets on the internet. So the stack actually that we're seeing here with the layers, that we're now in a layer 2, the routing mechanism, it's very comparable to what the internet was seeing in the very early days. And that's something really exciting. So payment channels are something very new. It's just coming up right now. The first real on-chain, the real Bitcoin, with real Bitcoin payment channel payments were made like a couple of weeks ago. So this is really on the edge technology we're using here. Okay, this is an overview. This is how the big picture looks like. So we're having 2 exchanges, our exchange A and B. They have their users, Alice and Bob, and they are connected via payment channels. Here, for example, with the Litecoin blockchain, payment channel on top of the Litecoin blockchain, and a payment channel on top of the Ethereum Classic blockchain. This means now Exchange A and Exchange B can send Litecoin in real time to each other, and they can now send Ethereum Classic in real time to each other. What is missing? One crucial part. Who is preventing Exchange B to run away after receiving 10 LTC from Exchange A? Reminder, a trade always consists of 2 parts. So I always exchange something in order to get something back, right? So Alice here sends 10 LTC, but she is awaiting that she gets 20 ETC back for her 10 LTC. So who now is preventing Exchange B to run away after receiving one part of the trade? This is where atomic swaps come into play. What do? They enable a trustless exchange of two assets. Exchange A and B don't have to trust each other without any middleman. Let that sink a little bit. This is revolutionary. This was basically not possible until like a year ago, that I can trustlessly exchange an asset with someone I don't trust without requiring anyone to sit in the middle and say, okay, I'm the escrow man, I'm the escrow service. So there is no escrow or middleman required. How do they do that? By guaranteeing the so-called atomicity of a trade. Meaning, either both sides of a trade happen or none happens. This is the very characteristic of atomic swaps. Both sides happen or none. There's just no way that only this part happens, but this one is not happening through cryptography. Yeah, and the cryptography is called hash time lock contracts, or short HTLCs. And I did leave it in there now. I'm aware not a lot of people might not be that technical. Anyhow, I did let it in to just have a rough idea for you guys, because I noticed we have a booth over here and people did talk to us, oh, atomic swaps, that's cool, I heard about it, but not really an understanding what it actually does, neither how it works. So now I try to explain how atomic swaps actually work. How do they make it happen that I always have to do both parts of a trade? So that's how it starts. I will do it really slow and you can ask questions later on, so don't worry about it. Exchange A goes and creates a secret. After creating the secret, it's just a random number. Just think of any random number. It could be like just 1. That's like my secret. I created the secret and then I hashed this secret. After hashing the secret, it's a different value. So it's not my secret anymore, right? So this hash basically, when someone has the hash, there's just no one that someone knows my secret. There's no way. That's how a hash function works. It's cryptography. And then Exchange A includes this hash into a transaction of 10 LTC and puts it into a lockbox. Really imagine it like a box where those 10 LTC are in there then. And this lockbox has 2 special rules. Special rule 1 is it requires this secret, A secret, and a signature of B. So if B knows A secret, it can get the 10 LTC out there. The other way. Exchange B also has its lockbox, the B lockbox, and now uses the same hash that it knows from Exchange A, not the secret, the hash, and puts it into a transaction of the 20 ETC. And like this puts the 20 ETC into the lockbox. The lockbox again has 2 special rules, with number 1 being I require A secret and A's signature. Observation. Both need the same A secret to be opened. So what now happens is, Exchange A, where Alice is sitting, she really wants to get her 20 ETC. She really wants to get her 20 ETC. I did it wrong anyhow. So she really wants to get her 20 ETC. So Exchange A and goes and reveals A secret, signs it in order to get the 20 ETC. That also means Exchange B is like, thanks for telling me A secret, now I can go and can get my 10 LTC out of the lockbox because you just told me your secret, right? And both have their coins. The swap is complete. So this was an atomic swap. So to put it short, in atomic swap, the basic principle is that there's one secret that is required for both parties to get out their coins. So in order for the first party to get their coins, they have to reveal the secret, and the second party then knows the secret and can get their respective coins. And that's all the magic. I hope that was somehow a little bit understandable. Yeah, so it's cryptography, so don't worry about how exactly this is ensured, but it's all cryptography. And the good news is it's already working. So this is nothing we came up with. This is already used in decentralized exchanges nowadays, like 0x, Ether Delta. They use this very principle every day, and it works. It's proven. Please. It's actually a sequence, right? So the sequence is a factor. So there's a certain order that has to be maintained. Yeah. Okay, and just a little side note, of course, if something goes wrong, like for example, Exchange B just drops that, just doesn't answer anymore, then there is a time lock actually then taking care that both get their coins back in case someone is unresponsive. So this is where that actual time lock comes into play. The other one is actually a sequence, yeah. All right, those were atomic swaps. Let's come to part 3 of our key technology, decentralized order books. So again, we have our 4 exchanges, and the 4 exchanges are running our XU node, our software. So they operate it. We provide the software. It's public on GitHub. It's open source. It's free. They just go and run it. And what the XU node does, it maintains a local order book, meaning exchange A, B, and C all have the same copy of the global order book. They are all aware of each other's orders in order to be able to fill them. So how does it now work if a new order comes in? For example, here we have someone on Exchange C, for example, Bob is now trying to sell 5 BTC for 10 Zcash. Oh, that's cheap. Bob is now entering this new order on his exchange. Through his interface, he doesn't leave his exchange. And what then happens is that the XU node picks up the order and propagates it through the whole network to all other XU nodes. And they go and update their local order books. So now everyone else knows that Bob's order exists. So in case someone on D, A, or B is willing to fill that order, can fill the order now and know that Bob is sitting here with the coins on Exchange C. Yeah, for the technical guys, it's something similar to a multicast messaging system, if that makes sense. So basically, they can choose to subscribe to orders from Exchange C, or they can choose to subscribe to special coins, for example. So if this one is only interested in Zcash or BTC, but not in other coins, they can only subscribe to that. Yeah, please. Yeah. Yes. I try to figure out your order, but it's about latency, right? It's like who's faster, right? Yeah. Yeah, exactly. That's the big headache we are still having. So we are still developing this thing. So latency is the biggest headache naturally that we're having. The basic rule that we have nevertheless is first come, first serve. So if I have the order and I shoot out the trade, so I shoot out the real coins that I get sent to the other one and I'm able to fill it, nobody else was faster than me, you're the one that gets it. So yes, it's all about network latency in the end. So the speed of your internet connection determines if you get the order or not. Or if you get the order first and then send the money as well, right? So it's all about network latency. It's like the internet. Okay, makes sense? Yeah, okay. Okay, the XU node constantly basically propagates orders to all its peers, right? It will constantly, just imagine there are constantly new orders coming in, constantly orders getting canceled, getting filled, so constantly there are updates propagated through the network. So now we're in a situation where not really each exchange is connected with each exchange directly, just like on the internet. They have multiple hops in between. So now we use XUC, our token, to reward people that pick up orders, verify signatures for like, hey, where is it coming from? Is it a correct order? And forwarding them. So if you guys, or in the first phase, exchanges are running XU nodes, you can earn XUC by relaying orders. On the other hand, if I want my order to get relayed all over the network, I have to pay an XUC. This is the main usage of XUC once Exchange Union is up and running, and this is how it's integrated into the ecosystem. Okay, takers being node. Yeah, that's technical stuff from yesterday. All right, summary. We are decentralized, very important. James did highlight why decentralization is a cool thing. And we are open source, free to use. Anybody can use it. All exchanges can use it. We don't distinguish between exchanges. Any exchange is welcome, no matter how big, no matter from which country, no matter if licensed, yes or no. Okay, technology consists of 3 parts. Again, payment channels, which for first time in history, we can enable trustless instant trades between the exchanges. Atomic swaps they make the trade itself trustless. I don't have to trust the other party. And number 3, the decentralized order books that we just saw that make sure that the buyers and the sellers know about each other, that the information is propagated. Who benefits? Both the exchanges and the users. So we structured the trading fee model in a way that exchanges will increase revenue. And I hope this will increase also the bigger exchanges. They should be interested in making more money. And especially for the smaller exchanges, they increase the liquidity. They have access to the whole volume, to the whole liquidity going on overall exchanges in Exchange Union. This is one of the biggest pain points, one of the biggest headaches new exchanges, small exchanges are having to get up and running. Liquidity, no users, no volume. Yeah. And for users, I trade from one account, from one interface. I don't have to go to another account and KYC this account and then manually move money in between exchanges. And XUC, our fee and incentive system, to first build Exchange Union, and then once it's up and running, it's used for order book relays. All right, where are we? We are currently in a phase where we're building Exchange Union. So one of our next milestones is to release detailed technical specifications. At the moment, our development is there, but it definitely needs a structure in form of some technical specifications, how it works, and that we really kick off our open source development. So this is one of the very reasons why we are here, why we are attending so many different conferences, speeches, and meetups, and will continue to do so in order to spread the word, get access to developers, convince developers to work with us in order to build Exchange Union. And by the end of the year, we hope to have a proof of concept implementation ready, meaning you are able to use it, but it's just not ready for production usage yet. And production on the mainnet, meaning with real Bitcoin, real Litecoin, real Ethereum by the middle of next year. Okay, outlook. Exchange Union is infrastructure. We believe that the system that we are building is something everyone should have access to, something similar to Bitcoin that just brings value to a lot of people, so it should be accessible to everyone. And we are building a decentralized exchange per se, just with the difference that we're targeting exchanges as our first batch of users, right? So this is the difference to all the other decentralized exchanges out there, that we're not targeting individuals just yet because we believe the technology is not ready yet. Plus, most of the users, most of the trading volume is actually happening on centralized exchanges. So it makes very much sense to go for the centralized exchanges first, say, hey, you are our users, all the users are with you, and connect them first, and then get the individual users on board once the technology is ready and sexy enough for an individual to use it as well. Okay, and it also builds a base for entire new products we can't even think about nowadays. So a wallet, like a normal Bitcoin wallet, Ethereum wallet, could just integrate Exchange Union directly locally and could swap any coin to any coin without a central party, without Shapeshift, without Changely, without going through any exchange. And even more, a merchant POS terminal. Yeah, think about emergent markets where someone could just like have this little mobile phone, this little smartphone running running an XU node that is hopefully there then technology-wise, directly on his phone. Doesn't need access to any exchange, doesn't need to verify anything. He directly is now able to accept all currencies in the world and settle them in what he wants, for example, Bitcoin. So for example, this guy just can accept all currencies and settle everything in Bitcoin and swap everything through Exchange Union. Directly, no middleman, no central exchange, no financial institution required at all. Okay, last question remaining. How to get involved for you? We need you. So we have a couple of job openings. You can check it on our website, exchangeunion.com, in the job section. Some of them are quite technical, so we are looking for open source Lightning and Raiden developers. So actually we are contributing directly to the Lightning open source project. So we are helping to get payment channels more mature by directly contributing. A couple of blockchain and cryptographer positions open, but also I think we still have a product guy and marketing positions open. So just check it out. If you think you are fit somehow, let us know about it. And directly participate. So for the technological people, check out our GitHub. You definitely want to see what we did over there. And for everyone else, join our Telegram group. We are constantly updating the community, what's going on, which meetups we're attending, about the development progress, and yeah, and so on. And Twitter, usually it's like official announcements. Whenever there's a new press release or some partnership announcement, you will definitely hear about us. All right, let's shape the way we exchange digital assets in future. Let's make it decentralized. Yeah, let's make decentralization work. That's it from my side. Thank you. And do we have time for questions, or James? Yeah. All right. Then feel free to ask, please. Right. So we have James, our CEO. I'm Killian. I'm the product guy. Then we have Christian. Is Christian over here? He's responsible for BD. They earn more. So we hope we can convince them with a monetary incentive. So we structured a trading fee system in a way that no matter what, they will earn more trading fees. And if I have a big exchange with a lot of volume going on, means a lot more earnings. So we hope to convince the big exchanges with a lot of liquidity by telling them, hey, you earn more. Plus, you can offer your users other trading pairs or even more liquidity, right? So you can offer your users more advantages. So if those exchanges somehow are interested in their users, they should be interested in joining us.
But you actually strengthen them even more, right? By potentially making them obsolete.
Right, right.
Roadmap besides that, when you become truly decentralized, and they could become obsolete. That's the real thing.
That's correct. I just think centralized exchanges are aware of that, so they see that they're already decentralized exchanges out there. They're already out there and working, and they're getting more and more volume every day, right? So this is a development in general that I would say, if you're running a centralized exchange, you should be aware of it and you should prepare for it. Nevertheless, why we think centralized exchanges will still have their position for a long, long while is two reasons. Number one, fiat. Centralized exchanges are the only way how to convert fiat into crypto, which will remain important as long as our everyday life will use fiat and we will earn our salaries in fiat, right? So if I want to convert my USD into a Bitcoin or Litecoin, I have to go through a centralized exchange. A decentralized exchange can't do that for me. Doesn't have a credit card integration, doesn't have a bank relationship, right? And this locally for every country, right? So for euro, for yen, for Korean won. So we will need these fiat on and off ramps. Number two, we are seeing a lot of, especially now with 2017 being a crazy year for crypto, we are seeing a lot of new retail traders coming in that are not willing to handle the technical complexity and also the responsibility of something we built. Responsibility means I have to handle something called a private key. Yeah. So the good thing is I can now control my money. The bad thing is I'm responsible for it. Our society somehow is in a state where it will take a while to make people adjust that they now have to take responsibility, back up their password, all these kind of stuff that they didn't have to do before. We are used to, oh, I forgot my online banking login password. Well, it doesn't matter. I just go there with my passport and they will reset it for me, right? We're used to this. So for all these retail traders, decentralized exchanges will be the way to go. They will not be willing to handle a system directly like this. So for the technology to mature in a way until this is easy enough to use, It will take years, most likely, right? That's our vision, but it will take a while to get there.
So you have this coin, the Co-founder XCC.
Yes.
So I say you are giving out these tokens, right?
Yeah, we do.
But who's gonna consume them?
Okay, let's talk about a real use case, what we think how it will look like in future. So when new exchanges are joining Exchange Union, we will allocate a certain amount of XUC to them, and they then will go and distribute these XUC to their users. So it's not for them as the exchange as like a bribe to join us or something. It's for, maybe you heard about this word, it's called airdrop, where you actually put XUC automatically into the account of each and every user. So if you're a user of an exchange, you just see suddenly one day, there are like 5,000 XUC in my account. I was like, wow, that's cool. So what you can do with this XUC is you automatically can use Exchange Union for a long while, for free basically, with these XUC that got allocated to you. The order book relay fees, exactly.
Yeah, that's true. Yeah.
Yesterday, you very clearly spoke about why you didn't want to be a central hub.
Yeah, yeah. We included it today in the PPT just for, thanks to your feedback.
You'd be a target for all sorts of mischief.
Yeah.
But what about exchanges that are already exhibiting abuse, charging fees, not letting people pull out their crypto without extraordinary fees than trying to close down an account? Would you be in a position having a network connection or central be some type of position to monitor those type of abuses?
I'm afraid, unfortunately, not. So, so the coins will be ending up in a wallet that is controlled by an exchange. So the exchange is really that's the good and the bad, right? So they take over the responsibility for all the users that don't want to take over responsibility, but it also means they're in full control of each and every user's money. We saw it this morning. So this morning there was just one of the biggest hacks in history, an exchange, and Japan got hacked. More than $500 million worth of NEM tokens got stolen, right? So this is something that's ambivalent, right? So once they take over the responsibility, the question is, can they handle their responsibility? So if they decide to freeze your account for whatever reason, it's like that. But in future, once it's live and you can be responsible on your own, yes, then we are there where this is not possible anymore. But it will take a while.
And the other half of the question was that if all of these exchanges right now, many of them are having very complex manners for what you have to register, and will they run into problem having a de facto network where people want to be coming in from all over where they have not vetted these people before?
So yeah, good question. So it's more about like a regulator point of view. So what does the regulator ask an exchange to do? So we prepared the technology in a way that an exchange basically can choose with whom the users of the exchange can trade. So if I'm, for example, Coinbase, I'm based in the US and I'm under a very strict law, it's a very strict jurisdiction. Coinbase can choose to only let its users trade with people from, for example, I don't know, Bitstamp or something, someone that has a license in Europe, and that's the only way, that's the only exchange that the law in the US allows them to let them trade with, and just ignore all the others. That's possible. But there's this responsibility to do so, to put this filter on, is with the exchange. Because we are not lawyers, right? So we cannot implement the laws of each and every jurisdiction on this planet. It just simply doesn't work. So the exchanges themselves are responsible to select that in that case. Whereas there are a lot of countries that don't have any law at all, right? So this is actually in most countries is still the case. Or you have like Japan where everything is super clear already. Right? So yeah, but it's possible technology-wise. Yeah.
Okay. I think next step we will have the panel. We are happy to invite the largest India exchange, the president of the largest India exchange, Sunny Ray. He is here, and we also invite the largest wallet service in South America, the CEO of Ripio, Sebastian is here. me and Killian, four of us will give a panel. You can ask us every question about the ecosystem.
Okay, am I the moderator?
Yeah.
Okay. Okay, let's start our panel discussion. I think we just do it like yesterday. Open questions from the audience. So you can ask questions about Unocoin, Ripio, business, and about our view on blockchain developments, about anything basically. So just feel free.
What is Ripio?
What is Ripio?
So the quick response will be something similar to Coinbase in South America. So, but it has its differences. We are the main wallet in Argentina and Brazil. And the main difference will be that like 60% of our user base is unbanked. So we build a large network that allows people to deposit in our wallet in cash. And that way they have a way not only to buy crypto, but also to pay online and have access to financial services. So it's kind of like a mix between, like, you will think like a Venmo and a crypto wallet for emerging markets.
I have a follow-up. In Latin America, is that the main trading system right now?
Yes. So we, as a wallet, we are in South America. We are the main company. We are the main wallet and exchange in Argentina, and we are growing in Brazil as an exchange. There are other exchanges that are bigger than us.
All right, any more questions?
Yeah, please. Is there an interest in making XUC coin kind of just a coin? It looks like it's kind of an interstitial coin between the other coins. Do you want to also drive it to be a kind of in-user coin where it's used in regular transactions and whatnot? Or do you see mostly this kind of this escrow type role where it's in the middle between these coins?
So let me try to repeat. So the question is, do we want XUC to be an end user coin?
Right, basically it's similar to like one, you know, where the user is using it. Or do you want it more in this role? I see this role as kind of a little bit like Ripple. You know, Ripple is kind of between the banks, you know, and whatnot, and a little bit removed from the end customer.
Okay, yeah, very good question. So actually, we thought about having XQC as an intermediary like a while ago in the very beginning. This was actually the idea. So what Ripple does actually is, in order to enable trustless transactions on Ripple, you're supposed to use their coin XRP, right? So you go from, let's say, euro into XRP, then XRP gets transferred in a trustless way, and then you go back into Argentinian, what is it, pesos? You know, into Argentinian pesos, right? So that's how it works. And we thought about using XQC in a similar manner. The problem with that is just that it's very hard to convince anyone to take actually the FX risk in that very moment. Plus, you need really liquid markets on both sides in order for me to be even able to do the exchange into XQC in that case, and then back into Argentinian pesos in that case. So even Ripple didn't succeed to build those liquid markets for banks to make it possible, and that's the very reason why banks don't use it. Yeah. So no, we don't want it to be an intermediary coin. End user coin, yes. So I talked about the allocation to users in the exchanges. So one day users of maybe Unocoin will open up their interface and will see XUC there. It's just there, right? So they get a certain amount for free. That happened to me as a user on for example, on Kraken. I got just Stellar Lumens for free. I was wondering, what the hell is that? I will find out about that. But once they have it in their wallet, they can just use Exchange Union without even thinking about it, right? But they know that this coin is there and they know about it. So it's kind of end user facing with that regard.
Yeah, great. I think like BNB and other like OKB, they are also end user coin. It's something, their function is similar to our function in number 2, and being reward our users, but we also reward all the exchange and also whoever provided service. So somehow we are still end user coins for this part, right?
So you said you would airdrop the coins to users of an exchange.
That's it.
So if an exchange is on board with XUC or XU node, would they continue to have multiple ways to accept user orders using Exchange Union or the traditional way? Or if some exchange wants to get XU node, does it have to be exclusively using Exchange Union?
The XU node is open source, right? So we don't put a branding on it or something like that, right? Open source also mean everyone is free to change it and put their own branding on it. How the network is composed, well, we are using actually open source ourselves, right? So we are using real Lightning Network. We're using the real Raiden network. So people are, so to speak, they are part of the Lightning Network. They are part of the Raiden network. But there is nothing like a separate XU or Exchange Union network. This is nothing like that, right? So we're using open source technology all the way along, right? So yes, exchanges are anyone is free to change it and to do anything with the code what they want. But there is no proprietary Exchange Union network where you can be part of or not be part of.
One of the underlying points is so you are bringing extra liquidity to an exchange that may not have certain trading pairs because they use XU node.
Yeah.
So to place orders against that trading pair that's brought over to Exchange Union.
Yeah.
It needs the user to use XUC to get his or her order relayed. Yeah, like Binance token, exactly. Yeah, yeah. Yeah, so if I want my order to go through Exchange Union, I need to. If I'm a buyer, let me think about it. If I'm a buyer, I might not need it. If I just fill the order. Oh, if I just fill the order, I don't need it. But if I want my order to get propagated, then yes.
Are you familiar with GitHub and what they put their users through and having to set up within their own system from GitHub to GitHub 5th that one has to apply for trust and one has to then get 1 million trust points before you could do anything, and then they demand that you put Ripple, actual coins, into the different accounts, whether it's going to be handling Bitcoin or Ethereum or one of the 4 or 5 that they do handle. And then they hold that hostage when you try to pull the money out. The type of abuses I was speaking about before, that they, you say, I want to pull out, let's say, $1,000 of Bitcoin, and they say you can't, you don't have enough funds for that. Then you go down $50 at a time until suddenly you're $600 before they say now you can do this. And you don't know what their fees are until it's really too late. And then they immediately close down your account with your Bitcoin in it. And it's these type of abuses that one wonders how at this point that with a community as large and growing and as visionary and I would say ethical as this one is, although there's always has some problems, why such things can happen.
That's a good question. You guys want to comment?
I can't comment on that particular exchange. I don't know who they are. But just as by way of introduction, my name is Sunny. I founded a company called Unocoin. We're the Coinbase of India. We just hit 1 million users last week. We're backed by entities like DCG. We're backed by, we came out of Boost VC. And Hewin Group as well. They invested in our last round. So I'm just happy to be here. I can address, I'm not the expert on XUC, but if anyone has any questions about a centralized Bitcoin exchange in India, I'd be happy to answer it.
I think like there is, I think we're in a moment there is so much attention and there is so much demand that then some companies can drop the ball and do stupid and bad things. But it's not a good business practice, like to make mad your users. And in the long run, everyone to have a successful business has to have users that love your service. So I don't think, as the industry matures, I don't think there will be any service that the users don't love. I don't know if that answers your question.
So I guess just in general, the industry is growing at the pace or is now at a size where it's kind of unavoidable to have some black sheeps at some point. That's what I think, right? So, but I mean, there are a lot of good exchanges out there. There are a lot of good wallet services out there that are custodial, where the funds are not controlled by the user, but that's on purpose, right? The user doesn't want to control his or her funds. That's why they choose to be a user of Unocoin, because I don't want to deal with cryptography just yet. I'm just not there yet, right? So I don't know, all types of unpleasant experiences. So Unocoin doesn't have as many downtime as Coinbase, for example, has, right? So there is always some sort of bad user experience when the system grows, when the whole ecosystem grows.
I'm just thinking when you're at the point where you'll be emptying these nodes, and then you run into an exchange that has, for whatever reasons, these forbidding behaviors, how you'll be working with them for them to loosen up.
So yeah, for the first phase, users will stick with exchanges. So I don't think we will do that much about it. It will be really in the later phases in a couple of years from now, where the technology is mature enough and it's easy enough to use for users to handle their own things. Then we can start solving these issues. Before, yeah, unfortunately not yet.
We are just like a decentralized network which provides a service. I think your question is more related to the centralized exchange right now, right? So I don't think it were like we were affected by this kind of incident.
The answer was like we can't really affect these. Yeah, we can't really change these kind of effects.
Yeah, we are just like provide solution somehow like a decentralized network. We are not like a centralized exchange. I think your question probably should ask some like a centralized exchange instead of us, right?
Well, first, that's very kind of you, thank you, but I just, in putting together 1,000 such of these, that how to then set up the type of protocols where it will be something that becomes a integrated, integral, natural living cell.
We'll work on that.
All right, so you said you developed Coinbase basically in India. What do you see the projections of India and Africa happening in the next 2 to 3 years? That region of the world. It's mostly been U.S., Asia.
Yeah, unfortunately, I don't know much about Africa, but in terms of India, so I'll just give you some metrics, right? So a year ago, we were probably onboarding about 10,000 users a month. Today, we're onboarding about 10,000 users a day, right? So that's like a 30x increase in terms of the number of people coming on board. Even in terms of volume and things like that, we're starting to see a big uptake. But if you compare it to some of the bigger markets like the United States, like South Korea, I'd say we're still an order of magnitude, maybe even 2, behind. I'd say we're a couple of years behind the rest of the big countries. But it's starting to pick up, I'd say, in a big way.
Because the reason why the whole Bitcoin started in America was just people being fed up with the Federal Reserve, the IMF, and the World Bank controlling everything, and then everyone's kind of downstream from them. So it'd be a really good way, if the rest of the world picked this up quickly, we would see a lot of fairer trade across the world. I'm just curious about that.
Yeah, I mean, people refer to Bitcoin as like digital gold, right? So India's probably the biggest gold market in the world. Indian women own more gold than the United States government. And so if you think about it from that perspective, there's a lot of young people that love computers. So I think India's a great place for Bitcoin to take off.
About a little over a year ago, I think India brought back their cash, we call it from the citizens, and then all of the smaller denomination notes were allowed in circulation, I think. When that event...
Demonetization.
Oh, so what's it called?
Demonetization.
Okay, great, thank you. When that event occurred, did you kind of sense whether there was a larger shift over to cryptocurrency? There were people wanting a cash-like equivalent, or was there kind of no effect on the crypto market in your opinion? I don't know.
Best marketing campaign ever. Yeah, our web traffic tripled. Yeah, but yeah, at the same time, you know, like Bitcoin, it gets a bad rep for being used for illicit purposes and all that. A study just came out last week that said that less than 1% of it is used for things like that and to like evade, you know, whether it's taxes or capital controls or whatever. I mean, in reality, I mean, Bitcoin's actually the worst thing to use if you want to do something illegal, because you literally have like thousands of computers around the world that record, you know, in its ledger. So, yeah. So we always say that if you want to, you know, do something illegal, use cash. If you want to like send your grandmother money, then you should probably use Bitcoin.
Question. I got into Bitcoin like in December, but the rumor was I think Bitcoin was more of I think anti-marketed, but mass media it still is, right?
Anti-marketed?
Yeah, meaning like you said, Bitcoin, you know, a lot of mass media, big banks, they write about that it's for money laundering, terrorism. Even though you're saying it's only 1%, potentially 1% of such purposes. I guess my question or my statement is mass media trying to stop crypto movement, or is it helping?
Have you ever heard that quote? They say, what is it? First they ignore you, then they fight you. No. First they ignore you, then they laugh at you, then they fight you, and then you win. Yeah. So I think so. Which stage are we at now? I think the thing is mass
Between
media.
laughing and
for the
fighting.
longest time they tried laughing, but then like I don't know if you watch the media now, like they use words like hodl and all these like weird meme words like are all over the news. I walk down the street and I literally hear people talking about Bitcoin now. Like it's like something weird is happening. I don't think people are laughing as much anymore. But yeah, but definitely I do think there's a incentive for the traditional system to, you know, still fight a lot of, I mean, I think you see it too, right? Like it's not like it's all just happened yet. There's still a lot of pushback. And I think that'll carry on for some time still. I don't think that's going to go away.
So now this movement, since you know the Indian market is getting growing over there as well, it's spreading as fast as in the States, you would say?
Yeah, so like I said, we just hit 1 million users. We'll probably pass 2 million in the next 2 months or so. Like we're growing quickly. I wouldn't, like I said, I think Coinbase probably has like 20 million or I don't know how many, but we're not in the same range as the United States just yet. But things are starting to pick up. But you know, in India, the internet revolution did not start in India. But you know, today, a lot of people program down there. So sometimes Indian people tend to be a little bit more cautious. But once they see an opportunity, they pounce on it.
So just a quick comment on the question before. So actually, I really think we're now in the phase where cryptocurrencies are considered a serious thing by a lot of big companies. Just an example from yesterday, Coinbase is now somehow charging 3% more for credit cards. So somehow Visa and MasterCard decided now to take 3% more for cryptocurrency purchases only. Right? So Visa and MasterCard now decided to charge a 3% premium on cryptocurrency purchases. This is the very step to them admitting it's serious, right? Otherwise they wouldn't do things like that, right? And what you read in the media and what you hear in the media, and especially always you get all those financial experts and bankers quotes. Yeah, of course, like if I have a banker's quote, this is like, I read it this morning on Twitter, is like, this is like asking the CEO of a taxi company what he thinks of Uber, right? This is not really representative, yeah. So they are getting terrified now, or now terrified is maybe not the right word, but it's they are acknowledging that it's serious.
Well, I need to maybe play a little devil's advocate. I think in certain parts of the world, the use of cryptocurrency in illegal transaction is actually quite high.
Japan?
China. sometimes the crypto community ought to be working instead of against. I'll be working with the regulators to come up with some solutions for discourage or even sort of stop the potential use of cryptocurrency.
I
Illegal
don't
transaction.
think
If that doesn't happen, I do think the pushback is going to be quite big.
I don't think that's the case, and I don't think Bitcoin is that much used for illegal use cases. If you look at the worst analysis that are serious, that are doing statistics to try to define how much of the volume of Bitcoin is towards, or the cryptocurrencies towards illegal activity, I think Ellipsis from UK is a company that does statistical analysis. I think they are the ones that have the highest one, and I think last year was 7%.
That's a small number.
Well, that's the largest one.
Small number.
Well, with regular money, it's over, I think it's 14%. It's below the current systems. So compared to the entire...
I put so much faith in the statistic, just as a sort of common sense. And let me give you some example. For example, in China, which I know very well, and there have been many cases, so there have been having campaigns of catching corrupt officers. And in the past, it has often happened that you will find officers, government officials that are caught, and they would have full apartment full of cash, okay? And they would actually rent the apartment or own a separate apartment that just you to put the whole house of cash in there. And that, now with all the cryptocurrencies, now to them, it would be so much easier to stash that than bribe in.
So we have.
Well, I think we can agree that we disagree. But most money that is laundered in the world is done through banks. It's not done in cash. And no, it's in digital money. Like, if you look at fines on how illicit money is moved in the world, it's through banks, and it's not in that cases. But anyway, I do still think that the discussion is going to like I'm an entrepreneur for a long time, and my first startup was an ISP in the 1998 in my hometown in the Patagonia. And I remember that times that there was controversy also with the internet. And the internet was for child pornography. It was for people that was anonymous, that was using this network. And the media, was kind of like the same with Bitcoin. Like, it's just a new network, people is afraid, and the media needs things that are controversial. And they will use these things because they need page views today. And it will, as it gets developed and we get more of the population using it, this conversation will fade out. At least is how I see it.
We have an example where we use the blockchain, where we actually use the blockchain to uncover corrupt officials in India that were doing illegal things, and they're in jail today because of it. So there are examples of, and then from day one, from 4 years ago, we've been doing KYC in the absence of any government requirements. We've been doing it just because we recognize that there is an existential threat that Bitcoin can pose, and we're a company. We're not going to hide from governments and from. We do. We go about doing it by just like how any bank would do it. We report suspicious transactions. We follow all the rules and regulations that are already there for the regular banking system, right? And then the thing is like I said, is we do KYC. What that means is like we know our clients. We require that they submit documentation. We verify who they are. We do phone verifications. We do residential proofs. We like there's a whole bunch of checks and balances. And so if somebody does something nefarious on our platform, now they could do it with Bitcoin and somewhere else. I mean, that's different. But if they do,
on what you would do, right? For example, so imagine the following scenario. It used to be that I would try to carry a suitcase of cash to that guy. Now I just handing a slip of paper with a private key on it. Here, you go. Okay, that's it. So, think about how easy that is and how hard it is to trace. So I mean, you could do whatever you want. You would not be able to trace that, right?
You give this guy the private key, you can still hold it, right? So I think only stupid people will use stupid people will use Bitcoin to do the money laundry, because the better way is Zcash. Nobody know that, right? So
Cash and Monero and so on would be even better. So, but the same idea is the same, that they handy, it's just 10 times, 100 times easier than.
no, I don't think so. I think the transaction is on the blockchain, on the public blockchain. It's pretty clear to find who is doing that. Let's give this an example. You buy Bitcoin OKEX. When you check the data, government check the data of OKEX, then he know who owned the Bitcoin, and the transaction is on the public blockchain, so it can easily track all the transaction, right? If you do this with cash, it's very hard to do that. So I think the private Bitcoin is the most most hard things for you to do money laundry.
There are also good examples. Like you see, the hack of Mongox that was a huge haste for a lot of Bitcoin, and they tried to launder it through another exchange in Eastern Europe, and Bitcoin has so much recording on it, and there is this public ledger that anyone can analyze, and then it was found very clearly who did it, and it was the people that did the laundering of that money got arrested. So, and if you look with every huge Bitcoin haste, or they had to hold the funds and not move it, and the ones that have tried to move that funds have been caught. And that is because the transactions are very easy to analyze. And there is, it's really,
So I just want to say one thing. So just because a technology makes a bad guy's life easier doesn't make the technology bad. Before cell phones, bad guys, I mean, but the existence of cell phones makes terrorists' lives a lot easier. They can communicate between one another, but that doesn't make cell phones inherently bad, right? So the fact that I can now send money to my grandmother when she needs it for milk is a good thing. And yeah, there's going to be a couple of bad guys out there.
yeah, and there is,
Right.
and there is very good, there are places where it's, privacy is something that is needed strongly. And there are very oppressive governments that, where there is no freedom, that people really need tools to have money that cannot be traced. And that is not a need in most countries. And I don't see people using privacy coins extensively and have liquidities for that kind of places. But there are places like Venezuela or like several countries around the world where really people need a tool for freedom. And I think privacy is a human right. So if policemen has to do more work for the freedom of people, is something that we have to balance.
Any other questions?
What are your thoughts of, there are rumors that Amazon, since Amazon already accepts Bitcoin, and there's a rumor that for the first quarter Amazon may, because they already purchased some domains, I'm not sure how truthful those like sources, they're saying Amazon crypto or Amazon crypto, this and that. if Amazon or when they join this crypto movement, what would it do to the industry? Since we know they're getting everybody, like Macy's, everybody's getting out of business because of Amazon. They're opening 10 warehouses, they're opening another one a week. So, how would that affect the whole movement? Because I know it's like
I don't. He's asking when Amazon will integrate crypto, or if there are rumors about that. I think as a community we should not speculate so much, and it's backwards. Like I think if there is enough people asking Amazon to add crypto, and we get into like merchants do follow users, and not backwards. So as a community, we should focus on having more users, and don't try to speculate so much. That's one of the things that I don't like from these bubble rallies, is that it is so much speculation. But if we get into the basis, like get more users, get more excitement on people about the technology itself, it will happen. It will happen.
Yeah.
How you're an the micro user actually. So like you keep saying, sending money to your grandma. Eventually, after the money that's deposited in your account, you use those credits. You'll buy more of those credits. So if I want to send money to my grandmother for milk, I'm going to buy credits to do that. Those are going to cost me more money than just sending her a check, right? So at what point does it become, well, to use the system, it's going to cost me eventually to purchase these credits to send money to my grandmother. So at what point does it become more expensive to send money to my grandmother via the system than sending her a check? And so the advantages versus disadvantages in the micro versus the macro. You know, so if you're sending large portions of Bitcoin, I see that. But for day-to-day purchases or small, because eventually that's where we're moving to, via the Amazon purchase, or we're moving towards an economy of small purchases versus these large block purchases, where we're wanting to use small purchases all the time. So at what point is, percentages of Bitcoin? Bitcoin is a huge piece, but that's no longer going to be a viable, I can't use each Bitcoin to buy something, I have those portions of, or breakdown. So at what point is it not viable to, what I mean?
Let me. So actually, it goes quite well with the Amazon question. I have to say, I can link them. So Amazon is purchasing a lot of domains every day, I believe. So I totally agree here to not speculate that much. And also, we have to recognize that our industry, blockchain and cryptocurrencies in general, is still in its infancies, right? So as a payment rail, as an everyday milk payment rail, it's just not there yet. So I don't think Amazon will just go ahead and will integrate plain Bitcoin payments. Actually, another big provider was just like, or will be switching it off very soon, because Bitcoin with its public blockchain is not the ideal tool to handle small everyday payments just yet, because we saw it the last weeks, there is congestion going on, then the fees go up, so I might pay more for my transaction than the actual amount of the transaction is, right? Nevertheless, we're at a very exciting phase now. We were talking about layer 2, about like the next level that builds on top of blockchain. So once this is out, I personally believe, and we at Exchange Union actually believe, then this becomes actually viable, right? So once Lightning is out there and it's actually, it's mature and it's working and it's usable by an everyday person, then I can actually use it for small purchases because the fees are negligibly low, and then we have an advantage over the legacy banking system, right? But we're just not there yet. This is like still a way to go. And I think Amazon, my personal opinion will be Amazon will be waiting for that day. They won't integrate Bitcoin like overnight, just because it's not the ideal tool for payments on Amazon just yet.
I think the about the payment question, especially for the situation in China, we got WeChat Pay and Alipay. We use that for every day. We don't use credit card at all, and no cash at all. And I think what crypto have key advantages to the fear is that cryptos are smart money. We got smart contract. We can have multiple usage far more beyond than the payments. So I think in long term, crypto will coexist with the fiat. So probably in payment industry, fiat still take a lead position. Probably in others, will be cryptos.
That's what I'm hearing, and also in spending as much time as I have been spending in the last year exploring the way the world is being changed by this and the way it's changing the world. That it is happening so fast, and it is such an exponential explosion, a geometric exponential explosion, that this is moving in a way that is hard to understand. We saw it with the internet, where suddenly it's linked together. What comes to mind is Peter Russell's book, The Global Brain, where he points out that it's not so much that all the things we speak about on our phones and the way we communicate with the computers, it's that the fact that we're all linked up this way. It is a global brain. That when the brain reached 12 billion of its cells, that there was a type of consciousness that was born, and I think that's where we're heading. And when you see the alternate realities and the game world and the type of infinite universe that's being created within this cyberspace, this cryptocurrency is part of that, and it is going to be part of human consciousness. It is now. And I think we just have to believe in that, and I think, guys, this is going very fast.
We have the grid to do our favor.
I was gonna say, I gotta go catch a plane pretty quick. You wanna come and take my seat? Any other questions?
I think we can have one more question.
Just follow up on that comment about smart contract. But you can have a fiat money working with smart contract also, right? So right. So in that.
The question is centralized or decentralized.
Yeah. So what I'm trying to say is that so we need to explore that issue a little bit better, because you were saying that that in China, where we have seen that the centralized payment system is extremely low cost, extremely convenient, and far more convenient than the credit card you guys see.
Centralized payment system, sorry.
And you were saying that one advantage of cryptocurrency is because you work with smart contract. So what I'm saying is that, playing a little devil's advocate again, is that you could make this fiat currency work with smart contract. So in that picture, then the cryptocurrency is not, the ones that make it smart. It is smart contract that make it smart. And you could have smart contract work with fiat money. So that's what
Yeah, that's true. But the question, will the government make it smart money? Sure. But right now they don't, right? That's one answer. Another will be the government have it like a smart money, but we are somehow decentralized, right? So we are way better.
I think there's going to be, if I were to guess, I think the difference between fiat money and the cryptocurrency gradually is going to probably stop sort of disappear, in the sense that there is a continuation between fiat, what we know traditional as fiat money, to cryptocurrency, and in between digital fiat and there's countries that government sort of controlled digital currency into sort of completely decentralized currency. So I think there's going to be a continuum.
Yeah, there is some. I think he's saying about the goal be smart contracts based on fiat. I think we're gonna see more countries starting to explore and work more with crypto and issue their own blockchains and have their own systems. What I don't think is gonna happen is that what a smart contract brings in a public blockchain is that you don't need to trust in a centralized node for the operation of that blockchain. And if you're making a smart contract, let's say a loan or a debt, and then that is running on a public blockchain, and if it's run by a government, then at any point they can change the rules. So that destroys a lot of the value proposition of smart money. And we have seen this all the time. Like governments, for short-term gains, they change rules and change regulation. And what brings this technology is be able to create smart contracts that we know are going to run as road until the end of them, and which is also has its own issues. But so I don't see mass adoption of smart contracts done by private blockchains. But that's my view of the world.
Okay, I think we can discuss in details later with what probably you can ask us for questions. I think that's it. This is the end of the panel and the session. Thank you very much for attending.
Thank you, guys.